Hello guys, welcome to another video. I'm AD from Pixel Profits, and in this video, I think it's number 7 in my series on market structure, and this one is going to be about the concepts that we've covered so far. Basically, it's going to be a real chart example of a trade I took this morning. I'm showing you the execution on the screen right now. I wanted to go through everything that we've covered up until now because I think that if we do too much theory and not enough actual chart examples, then it all kind of gets lost and forgotten in the whole noise of trying to remember every concept. So let's actually have a look on the chart and see how I used everything we've covered so far to frame a trade this morning. Okay, so we'll start on the 4-hour chart then. We're on the S&P 500 now on futures. Here you can see I've mapped out some external structure. Now, I haven't gone too crazy within all this because, the trade happened right down over in the far right there. Here is, as you can see, a break of structure. We were in an uptrend. Now we started a downtrend. So we had this break of structure here, creating a strong high. We then came down. We came back into the previous zone, back into the area here. And then we had another break of structure to the downside, creating this now strong high. So we could get rid of those. I just wanted them on there. I'll leave them. But I wanted them on there so you guys could see what I was tracking and why we are where we are now. All right, so I haven't drawn everything on here because it's not relevant to where we're at, but I just saw this as I was drawing things out and thought, okay, that's a nice trade there. You have a inverse fair value gap, 4-hour. This is all 4-hour at the moment, right? Inverse fair value gap, bearish fair value gap, bearish order block, change in state of delivery, price comes back up, taps into this, and off it goes to the downside. Creating another change in state of delivery here, another order block. So we are, let's see, let's start around here then. So I'll just zoom in a little bit. So we understand that we're in a downtrend. At the moment we've got an expansion, so we're expecting a pullback, right? As you can see, we did get that. So tracking the structure down, then there really isn't much in here except just pure bearish candles. And then we get this single bullish candle that gets closed below. What do we call that then? Change in state of delivery, order block. And we continue down, quick fair value gap there. I'm not going to cover this too much detail because we want to get to the actual trade. But we come down, and after our expansion, we expect a pullback. So we come down, and we come down actually into these couple of 4-hour inverse fair value gaps from the left of the chart. You see we tag into that. So we go into external liquidity. We covered that in the series so far. External liquidity, we come back up into internal, following our bullish change in state of deliveries up. Ignore that one for now. It hasn't happened yet. And then we start to go back down again from internal liquidity back to external liquidity. And then from the external, where do we think we're probably going to go from there? Back to internal. So up we go. We start creating, we don't actually create anything here much except this only single bullish order block there. And we run right through everything here now. Once we've tagged it there, but then we've run through it there. And we actually break into this area of this bearish order block. And we go quite far up, back into our previous zone. So this is where we get our our pullback, right? Back into the previous zone. We can see the break of structure over there. And then we start to drop down again. We, again, don't get much on the 4-hour chart. We just get this single bearish order block. And then we immediately flip to get a bullish one and another one. And it's a bit gappy in here, to be honest. I mean, you can see there's quite a few gaps in price on this chart. So there's a little bit of a lack of information in some parts of this chart, but we work with what we got. So now we've created an origin down the bottom here, right? And we've tapped into it twice. So it's a fairly strong looking origin. We then get some sort of reversal pattern here. But remember, from our 4-hour structure, our strong high is still up here. So we're still expecting that price is bearish. Okay, so when we see this reversal pattern, are we saying that we're actually reversing, or are we saying we're getting a pullback? Well, so far, because we haven't got up to here yet, we're saying it's a pullback, and we were correct, it was. So then after the pullbacks happened, we now get a new origin created, and we drop back down from external liquidity, creating this origin, and we drop back down to internal liquidity in this big fair value gap here, and all these different order blocks that we've got. Not going to go into them. We come back up then to external. We fail to make a new high. We can't break through. And you can see here we've got this mix of bullish and bearish order blocks. We've talked about that. Once we get that, we know we're in a range. So really, we knew we were in a range over here when we started getting this mix up. Okay, so I've drawn our two origins out. And yeah, we come into the origin, we drop back down into fair value gaps, blah, 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 blah. Again, I'm trying to skip over things a little bit because I'm trying to point them out now, because I think if you guys have watched the videos, you should be fairly familiar with what I'm talking about. And you can always pause and just study this yourself, or look at the chart. It's today's, or the last few days of price action here. Anyway, so we start creating bearish order blocks, and only bearish order blocks, and we're coming down then. So what do we talk about with a range? We can trade the extremes of the range back to the 50%. Now, can we trade from the extreme to the extreme? You can, but it's much higher probability to trade back to the 50%. And as you can see, what I've done, I've got a fib tool. I've marked out from this low up to this high. You can see my number one there, my 50% there, and the zero level somewhere down there. And that's basically a fib tool that measures this move. And that brings us on to a concept we haven't covered so far, which is premium and discount. It's pretty easy to understand. You just draw a fib tool with a 50% level marked out from any swing point to any sort of other external swing point. And then you can say that in between here, when we're trading in this range, if we're trading up in here, we're in the premium prices of the range, the most expensive prices of the range. And if we're trading down here, like here, for example, we're trading in the discount areas of the range. That's going to be important with my trade that I took today. We'll come back to that in a moment. So we're coming down back from the origin here, back into the internal liquidity, taking out more of this fair value gap and these inverse fair value gaps, which I haven't drawn because I can't draw everything or it would be crazy on here. And then we get another reaction from internal liquidity back towards external liquidity, back towards this origin. Now, here's where it gets to today's analysis. So all we've got so far here is bullish order blocks, and we've got this gap here, this imbalance. Okay, this is covered in I believe in my order blocks video, I think. Anyway, I'll link it on the screen. I'll get the right video. I'll link it on the screen for you. But anyway, gaps are covered. Oh no, it's my fair value gap video. I'll link that. Anyway, types of gaps in the market are covered in that video. Here we have this imbalance. Okay, there was nothing, there was a complete gap, in fact. There was nothing happening here. It's not a volume imbalance, it's a complete gap, right, a gap up. So we have this gap up. Now, what do I expect when I see these gaps? They're often going to get refilled. Look at this one here that got wicked into and then pushed price down. This one here came back down into it and then pushed price up, and so on. You know, they're all over the place on this chart, actually. This one got made, and then we came down, and then we just destroyed it, right? So gaps often get refilled. That was my first thesis for my trade. The next part was that I saw that this 4-hour liquidity had been swept. See that there? I've marked it out with the line inside an origin zone. Okay, let me zoom in a little bit more there. Inside this origin zone. Okay, so what am I expecting now? We've come back to the external liquidity zone here in this origin, and then I'm expecting a move back towards internal. Okay, so all of this was done on the 4-hour chart. Now, where is my target for the internal liquidity? Well, this is pretty good, right? This gap. I haven't got a lot more in there. There's no fair value gaps and stuff here. There are these order blocks that didn't really get revisited on the 4-hour chart, at least. But my target was this imbalance, okay? Now, I also saw that we had a inverse fair value gap here. Okay, we'd created that, and I started trading. You can see my trade execution with these 2 arrows there. I mean, on the 4-hour chart, it's within the same candle, right? We'll go on the 15-minute chart in a minute for our multi-timeframe analysis. So we've got the sweep, we've got the target of the imbalance. That's generally, and of course, this rejection from the 4-hour inverse fair value gap. So everything's saying bearish. Don't forget also, our current analysis says that our last protected structure is up there. So what does that mean? We know that this low down here in this origin should be the next target if we're going to continue bearish, okay? So everything's really pointing to a downward move. Let's look at the 15-minute chart. and see what happened there. All right, so we can see we're inside the origin. Here's the 15-minute chart, okay, and we've got different structures that I drew marked out. Here's the inverse fair value gap. So my trade started where the red arrow is. Let's see why I took it. Let me zoom in. So what is the internal structure of the 15-minute chart telling me? Well, the external structure, you can see these, right, it's telling me bearish. You can also see that the internal structure with these change in state of deliveries is also suggesting that the 15-minute is bearish, okay? So what I did is, let's see, I executed my trade when we got, I believe, this break here, and then my retest came during this 15-minute candle. And what I'd done is I'd put my stop loss up above because we had this other bearish order block here, which had been revisited, but I had a feeling that price might go up and take that out. So rather than putting my my stop loss above this candle here, which also would have worked, I just pushed it a little bit higher just to take into account this additional bearish 15-minute order block that was sitting above price. So you can see I've drawn out my risk to reward tool here. So this was my order block. I also obviously noted that there was another order block formed as well. So all of that was looking good for me. Now price came back up, it tagged me in here. So you can see we had another revisit of my order here and here, but eventually price fell down and I was tagged out on this candle here at 2 to 1. You can see price is continuing to fall now. Will it go lower? Maybe. But I just did a quick 2 to 1 scalp and I was actually sitting there watching this, waiting for it to finish. And I was drawing all this stuff on for the video while it was finishing. So I kind of wanted to get out the trade so I could make the damn video as well. But yeah, I took a quick 2 to 1 and it played out in the course of, let's see, what was this, 15, well, I don't know, what, an hour and a half, 2 hours maybe. And I just executed that while I was getting ready this morning, taking a shower and all that stuff. So yeah, I hope that shows you that most of the concepts that we've covered so far, including liquidity sweeps, the fact that price is fractal, we can identify the trend on the 4 hour. We can also identify the trend on the 15-minute. They're both aligned. So that's obviously, you know, a really good set of confluences for a setup if both your charts are aligned. If this was going bullish, then my trade may not have had quite the weight that it would have had if both charts weren't agreeing with each other. But in this case, they were. We also saw, you know, there's a potential, I haven't drawn the external structure of the 15-minute chart, but we saw that there's a potential target to go all the way down to external structure, somewhere down here, of the 4 hour chart. So you've got the strong and the weak lows that we're targeting. And we're targeting this imbalance, which again is just, you know, same thing as a fair value gap, really. It's an imbalance in the market that needs to be rebalanced. We've looked at internal and external liquidity points and how we swept liquidity at the highs and how we've gone from these origins to these fair value gaps inside. And we've covered fair value gaps, order blocks, inverse fair value gaps, change in state of delivery, all that stuff. So basically, I think that is a summary, really, on a real trade of all of the concepts that we've covered so far in the series. I did go through this quite quickly. If you have any questions, just ask in the comments. But otherwise, go back, look at the rest of the videos if you're confused about any of the concepts here. I did go quite fast, as I say, but I think if you've studied the videos properly so far, you should have a good grip of what we've just talked about here. If you don't, go back and watch the videos again. All right, guys, have a great day. Hope to see you in the next video. Take care. Thanks for watching.